Everyone, and welcome back to another Tesla weekly video for today. I hope you're having a wonderful weekend so far. So as always, we're going to discuss the numbers out of China, out of Europe, and then we also have some new price target upgrades from some analysts, which I found quite interesting, especially since we've reached all-time highs this week. The second part of the week was quite weak. But first, I do want to touch on the valuation aspect of things. And so for that, let's compare Tesla, okay, for the sake of this video, to GM and Ford. What you're seeing here on the screen is basically all of those three companies, cash and short-term investments. Tesla currently at $33.65 billion, Ford $27.71 billion, and GM at $27.32 billion. But then what happens when we look at total debt? Well, here you can clearly see the big difference. GM, $129.47 billion, Ford, $159.34 billion, and Tesla, $12.78. By the way, GM's market cap is $56.9 billion. And Ford, well, basically Tesla could, let's say, acquire Ford. Maybe they will have to add a little bit more. They could acquire Ford with all of their cash and short-term investments. Now, why am I showing you this? Well, of course, Tesla is worth more than all the other automakers combined. And now some people will say, but Tesla is not just an automaker. And I agree. But right now, the majority of its revenue does come from making cars. Tesla has a market cap of $1.35 trillion and a forward PE of 35 times. Now, the difference here, of course, as we've seen, is the cash, the debt, the market cap, the, let's say, profitability profile, and then of course, everything that you get on top of the car making, the energy side of things, software, FSD, robotics, all of that you get on top. And that's why Tesla gets such a high multiple, extremely high multiple compared to all the others. Now, even if we compare Tesla to, well, software companies, big tech companies, 135 times forward PE is definitely not cheap. Now, I know, and we've seen that previously, right? The analyst expectations, maybe that might not justify the premium, right? Sales growth of just 16-17% in the next 2 fiscal years. EPS growing faster than that, but still, we're reaching here EPS of $4 by fiscal 2026, still giving this quite a high multiple, right? Over 100x. But of course, this is not the first time that analysts have underestimated Tesla. And currently, the average analyst price target sits 32.5% lower than the price we're at right now. We have 47 analysts covering this stock, 15 with a hold, 13 with a buy, 6 with a strong buy, 8 sell, 5 with a strong sell rating. And as we've seen in the previous video, when you do the reverse DCF, you see that Tesla has to grow free cash flow by over 40% for the next 10 years to justify, well, today's price, approximately $420, $430 or so. So yeah, quite a lot of growth priced in. Now, can they surprise us in 2025? Can we suddenly see an explosive growth? Yeah, we could see that. We've talked about that in the past, right? All the catalysts, all the positive things that could happen with Tesla in 2025, that's definitely a possibility. But let's first talk again about the numbers out of China and Europe and some other things as well. If you enjoy this type of videos, leave it a thumbs up, subscribe. If you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start with the weekly insurance number from China. If you're a member of this channel, you probably got that number ready at the start of the week. The number came in at 18,500, which means that currently, year to date, we're at 620,087 insured vehicle in China. Q4 sits just under 160,000. And so quarter over quarter, we're up 10.5%, and year to date, we're still up 7.9%. The model mix is basically this: 12,870 Model Ys and 5,582 Model 3s. Now, what's interesting here is that despite the Model Y's price, which is way more expensive than a ton of cars in China, it still sits here at number 2, right behind the BYD Kin Plus. Switching to some European countries, UK, Norway, Netherlands, Sweden, Denmark, Italy, Spain, Switzerland, Czech Republic, and Iceland, it was quite a good week. We're up 37.2% week over week. Currently, quarter over quarter, we're up 35.8%. And as you can see, the last 2 weeks should be, let's say, beatable. Year to date, in those countries combined, we're up 11.9%. And here Pilolo actually shows us how impressive this week was. UK is definitely seeing some momentum here, but as you can see, this week has been one of the best weeks that we've seen from Europe. But overall, we have seen, well, huge decreases year on year, especially in France and Germany. The countries where things are picking up are Netherlands, Belgium, Spain, Czech Republic, and then, well, small additions here in all of these countries. Switching to the energy side of things, we have a new announcement. Tesla has secured a new $205 million Megapack contract to install 233 Megapacks in northern Chile. As for my favorite part, and one of the big things that could happen at the end of 2025 is of course the Tesla Semi. So Saya Incorporated, one of the largest trucking companies in the United States, has partnered with Tesla to introduce 2 of the company's Tesla Semi trucks to its fleets, just 2 right now. Saya rigorously tested the Tesla Semi in its operations earlier this year and achieved 1.73 kWh per mile. Our drivers were equally impressed, noting the smooth acceleration, comfortable design, and its ability to maintain speeds on steep inclines even while hauling heavy payloads. This feedback underscores the enormous potential of the Tesla Semi. And I think the potential is huge, not just in the United States, definitely in Europe as well. We've also had a report saying that EV market is gaining momentum as year ends. November sales were 13.6% higher than the previous November, with signs pointing towards a sales increase in December. About 8.5% of the new cars Americans bought last month were electric, while 1.8% of used cars bought in November ran solely on electricity. Now, we've known also that the EV share sales in Q3 hit 8.9%, the highest level recorded, and an increase from 7.8% in Q3 2023. Many new EV buyers qualify for a federal tax rebate of up to $7,500, and well, maybe with the fears of that going away, maybe that's why we've seen such an increase or a continued growth, let's say. They also said that EV inventory declined 13.8% in November alone. Then I had to add this because I thought this was quite funny. So Tesla could look to acquisitions to diversify. Tesla could look to acquire specific brands from Western car makers to diversify and expand its offerings. Alpha Value's Adrian Brazy says in light of the US electric vehicle maker's current struggles to renew its portfolio and focus on other segments like robotaxis, acquisitions could be in the cards. I mean, that doesn't make any sense, and I guess the analyst doesn't know about the Model Y refresh that's probably coming in 2025 and the new and affordable models that's also coming in 2025. Plus, it would make very little sense for Tesla to acquire any of the, well, legacy brands. That just doesn't make any sense. Moving back to Europe, and here you've probably seen the headlines, right? Tesla drops 15.2%. Well, yes, that is true. That is true. And we've seen previously in this video why. But it's also important to note that the following brands are also down and up a little bit. So Stellantis down 7.2%. Volkswagen up 2.9%. Renault basically flat. Toyota up 16.6%. Hyundai down 6.5%. BMW basically flat. Mercedes down 3.1%. Ford down 14%. And Volvo, I don't know why I wrote Volva, but it's Volvo, up 31.8%. And while Tesla is down 15.2%, their percentage of the share here went from 2.6 to 2.2. Last couple of things here are the analyst notes. So we've got one from Mizuho, increased the price target from $230 to $515 and upgraded the stock to outperform from neutral. I mean, imagine doing that at all-time highs. Okay. We are upgrading Tesla to outperform as we see idiosyncratic tailwinds over the next 4 years, positioning it favorably as 1. Loosening autonomous driving regulatory framework provides more FSD robotaxi valuation upside. 2. New Trump administration policies, consumer EV tax credit repeals position Tesla better with lower EV cost structure relative to peers. 3. Position to outgrow global LVP with more profitable EV roadmap versus peers with low-cost Model Q Cybercab in calendar year 26-27. There, Tesla sum of the parts with DCF implies around $1.8 trillion in market cap, with Core Autos, Energy and Others at $711 billion, FSD and Robotaxi at $614 billion, with upside to $896 billion, and then Humanoid Robots at $472 billion, with upside to $740 billion. So yeah, that's quite interesting that they are coming out with these price targets right now, especially since they come from $230 to now $515. They say here this is around 15.5 times their fiscal 25 price to sales, given positive recalibration with new administration and FSD robotaxi optimism despite near-term EU tariffs EV credit repeal challenges. As for the other two, we've got one that raised from $280 to $480. These cited expedited regulatory process for Tesla new Cybercab, ongoing cost reductions, and the planned launch of more affordable vehicle models in the first half of 2025. Additionally, the connections between Elon Musk and President-elect Trump were seen as a positive influence on the company's future. Okay, this feels more like a note like, oh, the stock has gone high, there's a big difference with our price target, so let us make up something, and poof, this is basically it. Then we've got another one, which we've covered actually last week, the $450 one, upgraded and raised to $560. We raised our 12 months target to $560 from $450 based on a 2026 PE of 140x. We increased our EPS estimate to $3.10 from $3 for 2025 and to $4 from $3.75 for 2026, which we've seen that that's basically what the analysts are already expecting. Our estimate revisions reflect both higher revenue related to high margin regulatory credits from the expected cancellations of the federal EV tax credit and lower unit cost assumptions. Now, to be honest, and I've talked about this before, right now we're at 135x, right? Forward PE. Now they're putting an even higher forward PE, even though the company is expected to grow. Usually what happens is you already get a huge multiple by the market, right? A huge premium, because the company is expected to grow. And what's expected to happen is that multiple should compress, should come down, right? You're already at 140. If you grow 30, 50% or so, that multiple usually has to come down. But the fact that we're now seeing people say, oh, we expect the business to continue to grow and actually outperform. But at the same time, we are giving it an even higher forward PE to justify our price. How does that make any sense? I mean, to me, it does not, right? To me, it's like right now, 140, 135 is already quite high because we know that Tesla is best in class. They're going to grow, launch new products, etc., etc. But how much longer are we going to stay at over 100x forward PE, right? At one point, we will have to stop raising that PE just to justify the price targets. Hopefully, I'm making sense here. Last thing before ending this video, the stock did peak right now at around $480. RSI on the daily was already overbought back then, now not anymore. We've seen a small retracement, especially late Friday. This was on the daily. If we switch quickly to the weekly, we're still overbought. Quite an ugly candle here on the weekly. The 20-day moving average sits at $377.5, the 50-day one at $325, and the 200-day one way lower at $252.5. Now, what will happen? Has Tesla peaked right now? Is this a local peak? Are we going back lower? To be honest, the stock market is a bit all over the place, right? Remember Wednesday, Jerome Powell spoke, everything went down, everybody was panicking, a correction. Thursday, everything was already green again. Friday, pre-market, everything was red. Then PCE came in, everything was green again. So yeah, what correction, what dip? There wasn't any. But some stocks will have to reset themselves as we enter in a month from now the next earnings season. Some stocks have been stretched to infinity. I'm not just talking here about Tesla, I'm especially talking about quantum and all the other stuff. They will have to prove themselves. 2 weeks from now, we will have the delivery and production numbers for Tesla. They have to beat the analyst estimates, right? They have to be a record quarter. If not, stock could get hit. And that is, of course, before we even get to the earnings report, the earnings call, and maybe some guidance for 2025. So yeah, currently what I'm doing, as I've done previously, I've taken some profits here and there with Tesla, and the rest we'll see what happens, because I do think that 2025 is going to be quite a special year. But seeing these analysts now come out with higher price target just because their previous one was 50-60% lower than what the price is right now, doesn't sit right with me, because everything that they're saying is things that we've been saying for quite a while. So yeah, that's about it. Do share your thoughts down in the comment section below, like, subscribe to all of that, and I'll see you all in the next one. Bye bye.